All right, good morning again, everyone. This is Mihai from petcenters.com. Hope you guys can hear me well. Just one more time confirming sound and chart before I start. One last time. We're going to look at pound dollar and pound yen. We're going to start with the larger perspective, weekly, daily. We'll see what setups we have there for swing trading. All right, thanks, Adinda. Okay, and then we'll look, actually there are some interesting developments from last week due to the high volatility of last week. I think we need to look at both pound dollar and pound yen. Some interesting developments there on both pairs, actually. A very interesting wave pattern developing right now on pound dollar. We'll see if pound yen has the same pattern. And let's get started with pound dollar. All right. Now, if you remember, guys, we were looking at this longer term perspective for some time. I'm just going to quickly remind you what we had. It was this large triangle that we've been looking at for a number of months. And then it broke to the downside, okay? Broke the trend line to the downside, broke the horizontal level. Came back to retest, all right, hit another low. And at that time, we were looking at a wave that looked like a 1, 2, 3, 4, 5, but it just did not seem like much at the time because we were not yet sure, especially when price went up all the way here. It was not really very clear whether it's trying to reach higher. And I remember very well within one of our sessions, I was looking at this trend line as a confirmation for further upside right around here, right around the top. Okay? It was, let me zoom in. Okay, it was right when it broke this level and when it also broke and closed above this area of resistance. Okay? We were looking also at a possible head and shoulders, but in principle, it was a confirmation for short term. Not for longer term, because it had not broken the key level, the 78%, which was considerably higher here at 164. Okay. Now, what looked like a weird formation or something that's not very well accounted for, this wave, which was supposed to be an impulse, coming right after this 1, 2, 3, 4, 5. Well, what looked strange then, it looks perfectly coherent right now. And I just want to build up the new formation because it's confirmed last week pretty clearly with a break of the 78% of the last wave up. And actually the wave count right now is perfect. And even this series of 5 really strong black candles is actually indicating something. Not sure how many of you guys are familiar with Elliott Wave, but actually this is a textbook setup, and we'll be able to follow it for many months from now on, probably until next year, around June next year. We should still have it in progress. Now this is what we have so far. Let me remove everything and just do a quick count of the waves starting at this point right here. So just intuitively, I'm just going to connect highs and lows and see what we have. We don't even have to draw any conclusions. First, we just simply connect highs and lows. Okay. Another move up and here. Now, you remember when I said a trend line break, there was a trend line break that at the time confirmed that this wave was over, and that's exactly here. This will have to have a different color. I will show you in just a moment why. Okay, 1, 2, 3, 4, and 5. The trend line set on the highs of this formation was actually broken, indicating that the red wave is over. Okay, the 5 waves formation is actually complete. So that means a wave on a higher level is complete at this point. We know when the trend line breaks that we're looking for another wave, and that's actually a retracement wave. We use the same rules that we used for this red wave to identify where this retracement wave would be over. And this would be the trend line on the lows of this formation. Okay? Again, we use the red. The red waves inside this retracement are on the same level as the red waves inside here, but they are just lower level than the pink. Okay? We just connect lows and highs one more time. Here you go. You have actually, if you look at these two waves, they are very, very typical, and many rules and guidelines of the Elliott waves are perfectly respected in a way that they don't even have to, but it really looks like a perfect formation so far. This wave A right here, let me label them to make it clear for everyone. Here we're looking at A, B, and C. You're probably wondering, why am I analyzing waves that are already over, and what's the relevance for current price action? You will see in a moment why we're interested to see if all the elements are in place. This is 1, 2, 3, 4, and 5. I'm not going to label them. It's pretty clear. This is A, B, C. We're looking at another formation about the same size or even bigger with this formation. Okay? There is no point trying to figure out what formation this is really. The pink, whether it's just a ABC pattern or a much bigger pattern, it doesn't matter, because at this point it is way beyond our perspective, our horizon. So either way, whether it's very big or just the size of this move, it's still going to be something about 2,000 pips. So for short-term trading, we're really not interested to go that deep into the analysis. All right. Now what do we have? Since this trend line broke, this is not a wave, really. This is just a trend line. Okay? Clearly broken at this point. This confirms that the wave, the pink wave, is complete. Here you go. By the way, guys, if there are any questions during the presentation, feel free to go ahead and ask. There is no problem. So we started something. We started a wave that's obviously on the red level one more time. Okay, and we're looking one more time for 1, 2, 3, 4, 5, something that would go something like this, looking more or less the same as the first formation. Now this is the relevance why we keep analyzing things in the past, waves in the past, because the more elements are in place, the higher the probability of the same wave that we identify right now and we confirm right now this week, the higher the probability of this formation to continue and confirm all the elements. Okay, not only one or two. There are really a lot of elements in place here that are very much typical. Even the retracement levels, okay, if you look at the retracement on this wave, this is something like 78%, okay, of the first. Wave 2 is a 78%, pretty much what I would expect. Look at the series of 5 very strong black candles. Wave 3, the strongest, the highest momentum in the entire formation. That's clearly the case for this formation here. Pull back again about 50%, 61.8. I don't think it goes above 61.8. And wave 5, which barely manages to make a fresh low. Again, quite typical and what we would expect. It starts retracing, and wave A and C are about the same size and about the same shape. Okay? They also took about the same amount of time to complete. Then what you see is a very, very strong drop. The kind of which we haven't seen, I think, since 2008. That's again confirming the sort of price action we see here confirms that we're looking at a strong move, quite strong and deep, and I do not think that at this point a move above 163 is an option anymore. Okay, I think we're looking obviously for some corrections at this point, but these corrections should not go too far. Now let's see what are the key horizontal levels. We're looking at a big level of support here at 52.70. It's where price bounced once, twice, and 3 times after NFP. We had a pretty strong move in GU. This is what makes me pretty bullish for short term. Okay, we are very bearish mid-term, long-term, but quite bullish in short-term due to the fact that the first wave in just 5 candles in 1 month, a bit above 1 month, it managed to cover this 1,000 pips very quickly with no retracement. So we're looking for at least 50%. Sometimes it happens, guys, that you will not see a retracement this big. Okay, you'll probably see something like this, maybe back to the trend line. This will make probably 38 to 50%. I do not expect more than 61.8 on the pullback here. Let's see what other levels we have. Important support that could turn into resistance at 56.50, first area of aggressive shorting. The trend line slightly higher, and there will be another level right around here. Previous support, previous resistance, now possibly again resistance. Somewhere around 59.20 before 160. The level that, according to this setup, should not be hit, the level where stops, long-term stops can be placed, is right around here, according to my system, around 162. We should not see price going anywhere beyond 78% consistently or staying above 161. That the precise level is 70. So you can expect 161, but 162 should be off limit. All right, this is where actually the setup would be void, around 160, 70, 161. But this is according to the system, the stop loss for long-term or mid-term shorts. All right, stop loss level around here. So we're just going to follow this map of the market. All right, now it went down. Clearly, we're looking for corrections anywhere in this area. I think, as far as I'm concerned, I think the momentum is already starting to fade in short term. Okay, it will not affect most likely the momentum of the bigger move of the red wave. So this is the sort of moment when you want to be short all the time. If you are trading, for instance, without stops, I'm not saying this is a good thing to do, but some of you out there, including myself, sometimes like to trade very small positions with very large stops or no stops at all, depending on the exposure. When you have something, for instance, like 10% of your usual position, well, it will not really mean anything. If it goes 100 pips against you, it will be like 10 pips. So really, you're not that worried if you see the price going up. Now, this would be an area, I think, to start shorting. I'm just going to mark it with arrows. Shorting levels, the more it goes up, the better the deal you would get at a good short. Okay. Now, what would be an interesting situation, and according to my Elliott Wave setups, a good short would be, first of all, to wait around 155, 156, and then use short-term entries for entering this midterm setup, but use the stops according to the midterm setups. Okay? You can also use the stops for the short term, but you might get stopped out while price might still drop later on according to the larger trend. It really depends how much tolerance you have for negative in your account and what sort of trading you are doing. If you're trading very, very short term, then all this won't matter to you at all. If you have a longer term perspective, and if you do not mind stops higher than 100 pips or price going against you, of course this requires low exposure in the market. You can never trade with high leverage and leave positions open for that long. For instance, if you are just watching this and you say, okay, this guy is staying short, and you short right now, well, this can turn into a really ugly situation if you see the retracement going towards 159, at which point I would still look for shorts and you would be down about 500 pips, while most likely still being right into shorting long term. But you really have to know what is your perspective. If you are trading short term, then ignore the signals until it reaches at least a very, very high level like 159. I don't think this will happen in 1 week. It might take a month. It might take a few weeks. These retracement waves definitely do not happen as fast as the impulses like this one. 5 weeks, very, very strong 1,000 pips drop. You won't probably see the 200-300 pips retracement covering the distance that fast. Okay, now let's see. I have these two levels for now. The stop loss for long term and mid term. Price really should not reach there. And these will be the setups. Shorts around 5,650 with stops around the 62. That's 600 pips. And right here, the aggressive entry. This is an entry where you go without looking at the short term. You simply trade the mid term because that's only 250 or 300 pips of risk, but you're going for thousands of pips, 1,000, 1,005. So you just adjust your entry and your exposure according to the perspective, which is again long term. Okay. Now we're interested in this trend line. As you can see, the conservative trend line actually was respected in the end. Yes, Solomon. Yes, definitely there is, but I cannot see that on a weekly chart. Yes, that's definitely a possibility. We're going to see about that. That's basically short term. So we're looking daily and 4 hour. This is still mid-term, long-term, what we're looking at right here in these waves. Okay? Expect this wave, the wave 3 of the formation, to be very strong and expect a drop to dwarf what we've just seen the last 5 weeks. Remember that the market was pretty quiet, both in GU and GJ. We're going to look at GJ too. There's something going on there, and some of you will remember that I was an advocate for long term in GJ. Well, I just think that setup might be busted at this point. We're looking at pretty strong downside in those pairs too. Okay, then probably the wave 4 you'll see something very small, and then another continuation, something like this. Now, this is just these are just hypotheses for now. I really don't have much to build this wave or this one or even this one. It's only this wave 2 that I'm interested in. Let's just mark them with the appropriate numbers. We're looking at 1. As Solomon was just saying, this might be complete or not. And wave 2, the one that we are trying to trade up, or the one that we're trying to wait for to be complete to short. Long around this area, short when it completes. Let's move towards the daily chart. Now we're starting to look at possible sub-waves inside this drop. It's not a very easy task. It just looks like just a simple drop without retracement at all on the daily chart, simply straight line. I see some correction here. This is actually enough to justify, well, a wave 2. This will be a 3, very small correction, wave 4 and 5. I don't really see to what extent this will help us at this point, so I'm not going to insist. What's very clear to me, Solomon, at this point is the strong support level that we have right below 153. So I'll just mark this as an important level. See. It's an area of support, really. Something like this. Yeah, the 52.70, 53.20. That will be the big longer term area of support. The previous double bottom, and right now we have already some reaction from Friday. This MACD is not doing much at this point. It's just not even starting to move towards crossover. I do not think we will have a crossover until the retracement will be already almost towards its end. So definitely we cannot use the indicator at this point. It's just overwhelmed by the last drop. And in such cases, from what I've seen from my experience with the indicators, you're just going to have a good entry for the trend following direction, not for counter trend, because it will be just too late. You want something actually right now. You would expect this crossover to happen around now, but obviously we're not there. And even if we go towards 156 very quickly, you're not going to see this crossover in the MACD. All right, now where's the confirmation that we could get? Again, not so easy. The red trend line. I'm going to start looking for some confirmation of some sort. I'm going to use the most aggressive trend line I can draw at this point, which is right around here. Nothing so far. So as long as we do not have at least this trend line breaking with some clear support forming, we don't have enough for short-term longs, at least not on the daily chart. The possibilities here, of course, and I did trade GU long today, but it was strictly short-term, 15 minutes chart. And if anything, I actually took a stop right at the very bottom of the move. Pretty unlucky, actually. Right at the very bottom, I closed the position exactly where market reversed back to longs, but then I took another long and covered for it. What I'm trying to say is I have this midterm perspective for longs. Yes. Definitely wrong. 149. I think 149 is going to be a very, very easy target. Ron, there's one thing right now. What I'm trying to do is keep within the boundary of the active wave. Because if we move now towards 154 and then it drops to 149, then I will simply move the waves, the red waves like this. Okay? It will not qualify as a retracement, really. It will be a move towards 149 because simply the market is just too bearish. There's just too much short going on, too much dollar buying at this point, and it will simply, we will just have to accept Solomon's scenario that indeed this wave, this very aggressive wave that has traveled that far, is still not over. Okay, that's why I'm saying that longs are possible and can be quite nice at the bottom, but they will have to be traded short term with short term stops. And that's why today I took a stop that was quite tight, because I'm not willing to risk against the trend for more than 20-30 bits. If things work out, fine, but if not, we just get out quickly, because this really can hit 149 even within this week, and it will still be within the boundary of the same wave. Okay, what we discuss now, I think, is better to discuss on the 4-hour chart and lower. Now let's see what the 4-hour is saying. I have some indicators here too. Do we have a clearer corrective pattern for the wave? One, this will be the retracement. Another wave 3, correction, 1, 2, 3, 4, and possibly 5. Actually, it's quite interesting. It's suggesting that we might see another low within the same pattern. This is why these waves are so great, because they keep you within the perspective that you want. If you want to trade weekly, you just go there and you see what that chart is suggesting. But if you see the 4-hour chart, there might be a different sort of information that you find here. Now let's just have a look at the indicators. Okay, we have a rate of change bullish without much reaction from the price. We have indeed the MACD crossing up and the trade crossing up, and this hasn't happened over the last drop from 157 all the way down. So I think we have one indication. Definitely the price action in short term is indicating that the move down is over for now. Trend line break, although it's not a full trend. It's just a trend line break. There isn't any static line broken as well. I need more than just the trend line, because as you can see, price has broken the trend line now, but it hasn't broken because of a bullish move. It broke because price is drifting towards the right, and that really means that price is at the same level, but it's just holding at this point, and that's not a trend line break as I understand it. I want more than just the physical trend line to be broken. I want price action above the level where the trend line should have been broken, somewhere around 154. Okay, I just want to see bullish price action, not just price drifting towards the right, because that means the opposite, that actually the bears are controlling the market. Apart from this trend line break, let's see if horizontally we have something. This would be the level. Yeah. This was the level in short term. 153.90, which is pretty much 154. And since I have another higher level where I can place this confirmation. Actually, I'm looking for confirmation even at the 5390, but I have the resistance right now from Friday at 5398. So I'm just going to use that instead. Okay, just to make sure that when I see this level broken and the hourly is closing above, indeed we have short-term indication of upside. I was talking about these, the dynamic of the trends about 2 weeks back, just to know what does it mean actually that we are done with the downside at this point here. What elements do we have in place to support the theory that, okay, we should be retracing now 5.6, 5.7? Well, we have one element. We have a move from the bottom all the way here that retraced the last move down entirely. Okay? Actually, the last move down is this one, but I'm just taking this one to make sure, and actually it's bigger than this one too, bigger than both. That's one thing. There's a minor trend line broken. This would be the second thing. But there's one thing that it is still missing. The definition of the trend, meaning what are we looking at? We're looking at lower lows and lower highs all the time. Do we have higher highs and higher lows at this point? We have a low and we have a higher low, which is not yet confirmed. We have a high, but we do not have a higher high as of now. Now, once we have a higher high, and that's going to happen most likely at the break of 154, then we can confirm indeed. And this will be my answer to you too, Solomon. How do we know that price is not continuing lower? Well, we never know, of course, but once we break 154 and we stay there for, well, I would want to see the hourly spending time in this area and eventually breaking the previous high. Well, that's when I would get ready to see corrections up to 156, eventually 159 if we are lucky. Okay, but definitely the corrective wave should be in place, confirmed, and healthy enough to support some price action. All right, at this point it's still very weak. Now what do we have? We have a spike. We have a price covering the entire length of this last move down, but it's just a spike. Price did not manage to conquer this level really, okay, and nothing else. So from the elements that define for me a reversal in trend, I have only two elements out of 5, and the most important one is missing. I do not have a dynamic of higher lows and higher highs. I have a dynamic of higher lows, yes, but it's not confirmed. I do not have a dynamic of higher highs at this point. I only have one high. So only at the break of the previous high we will actually have something confirmed. On the other hand, let's just look at it really from a short-term perspective. Can it continue even lower? It can very well continue even lower for 2 reasons. One is the fact that actually on the last wave down, okay? Starting at this point, the red. We have 1, this will be the correction. 2, wave 3 is ending, let me check. I think it was on the daily chart. It's more easily noticeable. 1, hold on. Which level was it? Really hard to tell with these very, very strong waves. Oh, it's from here. It's from here. It's from here. Okay. The wave count just simply doesn't include a last drop, another attempt lower. Okay. There are actually 7 waves here, so it's pretty hard to tell. Once again, it's not easy, but since the trend line break is just not actively confirmed, and well, the indicators might be pointing up, but what's the point? I mean, I'm not going to define a reversal based on indicators. They are just there to confirm or to give me slightly higher probability. But if I do not have price confirming that, the indicators are just useless. Okay, the wave dynamic is pretty much bearish still. Okay, and that would be the first element. The other element, and most important, is if this move up on Friday was just a correction, then we're looking at pretty serious drop. Even though I don't expect it to last, okay, this will be one. The correction happened today, and as you can see, price is very, very tight, in a very tight range due to, well, most likely it's due to the bank holiday in the UK. We have really low volatility today on the USD pairs. If that is the case, then probably we're going to see very slow price action for another hour or so. But if we break 153.20, well, then forget about this, which is not confirmed anyway until this level breaks. Longs are only valid above 154, and we are still in well, this would be a no trade area, no trade zone for me. Okay, I wouldn't want to short above 153.20 either, because it's just gonna have price stuck in this area. And as you can see, this black wave, it's clearly not confirmed, but it doesn't really show that it's wrong just yet. If it breaks 20. Okay, and this will be one of my setups for today. Ignore the pink line. This is a weekly level, so we're not going to need it for short term. We're looking at the blue line, and the blue line will be right below the 78%. I need to check with the fib on the last wave. That's actually lower than this. It's right here at 153. Well, if 153 is hit, then probably everything that the bulls have been working on since Friday is just going to be thrown away. Nothing will matter. Because if we have a fresh low, then all this dynamic, these two arguments for longs, they're all going to be gone. Okay? Longs are only sustainable above 153. So let me summarize things from what we see so far. We're looking at the 15-minute chart for just a final idea. Well, today's price action is meaningless, really. It doesn't make any difference. As you can see, it's stuck here between 5,340 and 5,390. It doesn't make any good statement, neither a bullish statement by breaking 154, nor a bearish statement at this point. Just lower this to the channel, the retracement channel. Okay. And I will mark the 154 with another color, and then we'll draw some conclusions. All right. Now I think we have all the elements in place. You can actually see that when you see pink lines, these are weekly levels, and they shouldn't bother you for as long as you're trading short term. Okay. Yeah, that's what I'm doing right now, Ron. Putting everything together. Point is, with the waves, there are lots of things you have to take into account. Sometimes you see it takes 40 minutes to actually do a complete full analysis, see everything, look at all the waves, and only then you draw the conclusion that you're interested in. But the good news is we can right now sketch a picture of the setups in the market, whether it goes up or down. So we can be prepared. One thing I want to say is between 5.4 and 5.3, actually between 154 and 153, let's just make things simple. This is a no trade zone because basically it's at the whim of choppy price action without a very, very clear direction. It's still in an area where bulls can make it up. It's still in an area where shorts are not confirmed, longs are not confirmed. So I would mark this area as a no trade zone. 153.90, 154. Let's just make it 154 to 153. Okay? And we write it down here. 153 to 154, no trade zone. All right. This is it. This is why I was saying that when I went long, my stop was very low because I really have no preference. While price is here, I cannot have a confidence for any of the two setups that I want to point out. Longs start with 154. 154, usually I like to see price action above that point. So don't just go on a spike and do not enter with orders. Longs at sustained price action above 154. Okay, that would mean that the black wave is confirmed. That would mean also that all the elements that I have for, okay, right. I think I need to put these slightly higher because we won't be able to see them. Okay. All right, better this way. Okay, 153, 154, no trade zone. Longs at sustained price action above 154 with a target of, well, we have the weekly levels here, 156.50, 155.30. So I think it's pretty much, it should cover a few days of good price action with a direction. Once we break 154, all the elements I have in place for a reversal pattern will be confirmed. Trendline break, at the time it will be confirmed. A dynamic of higher highs and higher lows, also confirmed. The trend line is already confirmed. The retracement of 78 minimum and ideally 100% of the last wave down is also confirmed. And well, the fifth element is not mandatory, but the most important will be the dynamic of higher lows and higher highs. Okay. Now, if we see 153, that would be the bearish area, short below 153 with target. Well, this is where it becomes a bit complicated. I would expect a target of 127 extension of the last move. 127 extension of the last move up, which is this one. And basically, because of this big weekly level at 152, I wouldn't expect price to go down for too long. That means I would keep shorts for short term, and I would keep them for a target that would not go beyond 152.30. I said 153 here. Target 152.30 max. Now you might say, okay, why are we so afraid of shorts when we are trading with the trend? Well, I'm afraid because of this very important level of support on the weekly. Price can definitely spike below, but do not expect price to stay for too long there. Okay, going long below it is just too aggressive. But if you ask me, that might be a good idea too. It's just if you're trading with the trend, that would sound like a crazy thing to do, just buying when the market is in such a strong trend. But believe it or not, as far as this, midterm levels are concerned, that would make more sense than continuing to short below 152.50. All right. Remember, yes, we are in a bearish trend. Yes, it could go lower, but don't go too far and don't push your luck towards levels that are just maybe unreachable at this point. Now, your question, Ron, is if I expect you to drop back to 149 in weeks ahead. That low would negate the bullish action on Friday. Ron, it all depends on your perspective. If you are looking in short term, then price action on Friday would mean something. And this is what this black pattern is suggesting. This black pattern is actually putting the price action on Friday into the equation, and it's trying to see whether we get confirmation for short term. But that's really all there is, a short-term setup and a short-term perspective. If it breaks 153, I would say forget about Friday's price action, delete these waves. Nothing matters anymore because the dynamic of lower lows and lower highs continues. And that means the bears are again in control. And the bulls will have to reconstruct something like this at some point in time. And, well, it's always better to not expect anything while the market is not showing you something. Like, for instance, right now, we are shown one element. That means be careful because longs are still possible. And this is why there's a no trade zone at this point. But if we go higher, then yeah, it will start making sense and it will start giving us confirmation. One thing I can answer according to my system, Ron, if you see as much as 152.90 today, 152, let's just be precise here, 152.75. If you see as much as 152.75 today, Friday's price action would not mean anything at all. It would just be a larger correction due to volatility, and basically, not only that it wouldn't make a bullish statement, it might even make a bearish statement in the sense that the bulls had their chance and price did rise for about 150 pips here without a serious result. And that means the pressure on the pair is just so strong that at this point, this is just not enough. Technically and fundamentally, the dollar is just too strong. So it might get the bulls into trouble even more. As far as I'm concerned, I'm looking at this black wave just for now and only until I see 153. If I see that, it will go off my chart and I won't even look at it. It won't even matter because there are just not enough elements anyway. Okay, this black setup is only interesting when we see 154, 154.10. Yeah, sustained price action, that's the word. That you don't need only a spike. Even if it spikes and comes back, it will not give us a dynamic of higher lows and higher highs. It's pretty complicated when you're trading against the trend. You always have to have so many things confirming you in, and well, it just turns out to be a pain in the head to look at all those elements and going against the trend all the time. Ron, I stopped wondering what is the cause of price action long time ago. I really do not know what is the cause of price action. And to be honest with you, I think nobody does. I think everyone is just throwing some hypothesis or their own idea about why price did that. If you ask a technical guy, it will go up because of some pattern. If you ask a fundamentalist, he will say something different. And in the end, it really doesn't matter. What matters is price. That discounts everything and that discounts our opinion. I cannot answer that. Definitely there was some fundamental input. Clearly on Friday we had the non-farm payroll. We had some interesting fundamental data coming in, but to what extent that was a move caused by fundamentals or there were some technicals involved as well, that I cannot answer. And it really doesn't matter to me. I trade just the same, and knowing what exactly caused a move, for me personally, it doesn't give me any good information, because I can never repeat the same experience. I will not know if the QE3 will do the same, the exact in the exact same way next time. There are just too many elements in the market. There are too many variables in this equation, and I think trying to pinpoint and trying to set the rules, okay, it's because of fundamentals that the price goes up, it's because of technicals the price goes down, I think it's just pointless. It's just like I would try to convince you that these moves are technical, when in fact I have no real ground for that. I think it's just too many dynamics at play in Forex, too many things. The market is too large, and while there can be some, you can account for a few things, but just to know everything and why the market is moving at a macro level the way it moves, I personally quit trying to understand. What I'm really trying to do, on the other hand, is to pay attention when price is doing something and price is actually telling you something. And because I'm a technical trader, it translates into technical patterns. But I think even if you are a fundamental trader, you're not going to simply enter positions without opening a chart. So basically, you still need some support, some technical support, even if that's very, very basic. I'm not sure if that answers your question. Whenever I have questions related to fundamentals, I have to admit ignorance, and because I'm not really following and I'm not basing my decisions on fundamentals, so I prefer to not to give a strong opinion on that. But definitely, while I don't trade them, I accept the fact that fundamentals move the market. It's just that for me, it's I'm scratching my head when I'm trying to really put all the elements together and see how those fundamentals affect the market. I think that's where things get a little bit confusing. That the fundamentals influence the market, I think, is completely undoubtable. No one can deny that. All right, guys, I have to stop here, actually. We have some short-term setups which are written right here. I think more interesting than this is the midterm scenarios, and we'll be following these over the next few weeks. For midterm, I would suggest right now simply watch and do nothing, because we do not have the key level for shorting, and we do not have enough elements for buying. So, while we stick to what we have, we stick to short term. We always have short-term trading when these setups are not giving us enough. Thank you very much, Imad. And exactly. Well, that's a different story, Anil. You know, with all the things that all the news and all the information that we have at our fingertips right now, the probability of that information confusing you in some way is just too strong. Sometimes I'm trading, I have a good day, and I'm watching the news, and I don't understand why the news is saying that and why I've done the exact opposite and things seem to be working out just fine. I think I'm just, whatever I'm doing, right or wrong, is pretty straightforward. So I accept that, and at least, you know, you don't need to be confused on top of everything. The market is confusing enough. All right. Definitely it is, Solomon. Definitely it is. Yeah, that's why I said that the fundamentals clearly influence the market. But in what way and when exactly and how, I think that question is not so easy to answer. Clearly, Anil. So it's just a matter of choice whether you choose to go to the fundamentals, if that's something that is more comfortable for you, or you go to the translation. Okay? It's, I think, just as reading a text in one language that you don't really understand, or translating it into something that makes sense. The result is the same as long as you get the point. Thank you very much, guys, for your participation. Thanks for the discussion. It's always interesting. Hope you have a great week, and I'll see you next Monday.